Hello, I'm Katie Wantock, Farm Management Outreach Specialist with the University of Wisconsin-Madison Division of Extension. This video is part of the curriculum to support farm businesses to make decisions and take action to move their farms forward and ultimately reduce the farm members' stress. In this video, I'll be introducing the farm business financial model and the financial statements needed to evaluate a farm's financial position and performance. Let's get started. To understand the farm business's records, you need to understand the purpose records serve to and for your farm business. Keep in mind that you want to make the best decisions possible affecting the future of your farm business. A farm financial model is a tool you can use to help make those decisions. It offers a linear and circular process for informed decision-making. From the image on your screen, you can see that there are three primary functional areas associated with the financial management model. Records feed into management reports, and reports will help you integrate financial sense into your farm decision-making. The farm financial model begins with records, which details collecting and organizing of your farm business's production and financial information. In this part of the process, you should be collecting production or physical records. You must also collect and organize your financial records or your income and expense receipts in an accounting system. An accounting system is a set of actions and methods designed to collect, store, and process financial transactions into management reports for decision-making. Traditional practices of farm financial record keeping have largely been informal, simple, and vary from the generally accepted accounting principles, which have long been used in other types of businesses. With this information, you will be able to generate financial statements and can begin creating management reports for decision-making. Under management reports, the records are transformed into financial statements for analysis and reporting of your farm's historical financial position and performance. Let's review each of these financial statements. The balance sheet is one of the most used financial reports and displays what your farm business owns and what is owed. The difference represents your claim to assets or net worth, or your equity in your farm business. The balance sheet lists assets, liabilities, and net worth, and represents a snapshot of the farm business as of a certain date. The balance sheet is also known as the net worth statement, or statement of financial position, because of the importance of net worth with respect to representing your farm business's financial position. The income statement is a report of the farm business's financial performance during a given time frame. It measures profit or loss in each time period. Every farm business produces a product. Product sales generate a return to the expenses incurred when making that product. The income statement is used to measure the cash income or revenues, cash expenses, and the financial value of non-cash income and expenses used during one production cycle. It's usually a calendar year for farmers. The income statement is also known as the profit and loss statement or statement of earnings. The statement of cash flows tracks the sources and uses of cash in your farm business and adds insight to the understanding of your financial position and performance. The statement of cash flows summarizes cash activity over a certain time period, such as a calendar year. The statement of owner equity reconciles the change in equity from the beginning balance sheet to the ending balance sheet for your farm business. The primary motivation for this statement is to identify the amount and source of changes in equity. These four financial statements should be prepared on a consistent basis. With well-prepared financial statements, you will be able to analyze your financial ratios and measurements and understand your farm's history of its financial position and performance. Records and management reports provide a good basis for you to make decisions and plan into the future. Pro forma refers to the future view of the farm's financial position and performance, which in turn can be analyzed for feasibility, profitability, and riskability. Pro forma financial statements complement the farm's budgets. Cash, partial, and enterprise budgets are commonly used to assist the farmer in decision-making. In summary, the farm financial model is also a tool for understanding the financial flow of your farm business. From record keeping to financial analysis, this model illustrates how to make sound financial decisions and identifies tools to help in this process. The Farm Pulse program, which contains articles and videos, is a free UW Extension resource that provides more detail on each component of the farm financial model described in this video. In addition, Extension has developed the Farm Pulse Financial Management and Analysis curriculum, which is a self-paced online course for farmers and others interested in learning how to use their farm financials to explore their farm business decisions. This course, which requires registration and a fee, will help you evaluate your finances, take the pulse of your farm business, and set goals for the future of your operation. Learn more about the program and curriculum at go.wisc.edu/FarmPulse. Thank you for watching this video on the farm business financial model and the financial statements needed to evaluate a farm's financial position and performance. Please visit the Extension Farm Management Program website for more information and resources on these topics at farms.extension.wisc.edu.